past papers. So this is the paper two that just passed, right?
Yes,
In 2025. The first question they had was a statement of account, right, which is a source document, which means that they probably need to make sure you know how to prepare all of your source documents, because technically, statement of account, the word statement of account never appear on your POA syllabus, but they do say that you have to know source documents. So it means you'll have to make sure you know how to prepare all the different source documents, because you never know what could come, right?
yes,
Yes, sir.
So they had this statement of account and you had to complete your balance account. So if your balance is 520, invoices would increase the balance. The balance is how much the person owing. So any invoices will be extra purchases that the person made, which will increase how much they owing. And any payments they made would decrease how much they owing. So at the check they made, a credit note is them returning goods, so they no longer owe that. And a discount also reduces how much they owe. So they would have been owing 520 at the start, then they would have made an additional purchase for 340, which would have made them now owe 860. To the first balance, it would be 860, because 520 plus 240 is 860. Then when they returned goods and they receive a credit note for $24, because credit notes are used when goods are returned, right? You would minus 24 from that balance, so the new balance would be 836. Then they made a payment of 663. So you'll minus that from their balance. So the new balance would be 173. Then they receive a discount of $17. So you'll minus that from their balance. So the final balance will be 156. This was 2 marks. So it's probably half mark for each answer. And from here, they give us a cash book to do. You're also supposed to be able to do cash book.
Yes, sir.
But let's see. When you're doing a cash book for exam, the very first thing you're going to look at before you go into go to the transactions is to see if it have any opening balances. So you'll know not to forget it, right?
Yes, sir.
So they have an opening balance for cash of 100 and a bank overdraft for 8,150. The date is the 1st of August. So the balance for cash is 100. Where is that going, on the debit side or the credit side?
The debit side?
debit side.
Your assets always have debit balances, right?
Yes, sir.
So they put the 1st of August. And what I'll do, I'll write 2024 on top here. So I won't have to keep writing the year. Same thing. So the 1st of August, balance brought down 100 for cash. And then they said they had a bank overdraft of 8,150. Where would that go? Debit side or the credit side?
Credit side, sir.
Credit side, correct. Bank overdraft is when you spend extra money. So now you're owing the bank money, right?
Yes, sir.
So we'll come here. 1st of August. Balance brought down. How much was it again, boy? Check. It was 8,150. But 8,150. Now we start going through the transactions. First one, a check received in July was dishonored by the bank. So if when we receive money, what would we do? Debit or credit?
Debit, sir.
All right.
Debit.
But now that we know it's dishonored, meaning that we actually did not get the money, what do we have to do now?
Credit, sir.
Credit it, right?
Yes.
To take it back out the account. So you come here the 9th of August. This is a check. And it was 462. Actually, you could just put 80 supplies. I put 80 supplies. 80 supplies. And the amount was 462. Where do I put it?
In the bank section, sir.
All right, because it was a dishonored check. Whenever you're using check, you're using a bank account. All right. Next one. B. Harry paid $64 by check for gas for his wife's motor van. So this is for who? This is B. Harry prepared for them account. So we are B. Harry, right? B. Harry paid $64 by check for his wife's motor vehicle. For gas for his wife's motor vehicle. What do you call that?
Payment, sir.
Specifically, when you use money for something personal,
Withdrawal, sir.
withdrawal is very close. When you take out money from the business or personal use, they call it drawings.
Oh,
Right?
Yes, sir.
yes, sir.
You come on the credit side, 18th of August. The details will be drawings. And you notice this time you don't have to put in folio, right? They didn't put a folio account, a folio
Yes, sir.
column. Right? So sometimes they will ask for it, sometimes they won't. And it was check. So you bring it under the bank column again, $64. The next one, received a check from T. Moore to settle a debt of $680 less 2.5% discount. If we receive a check, are we going to debit or credit?
Debit, sir.
Debit.
Debit. So it'll be August 24th. We received it from T. Moore's. And it was 680 less 2.5% discount. So first thing we're gonna do is calculate the discount. 680 multiplied by 2.5% is 17. So that is how much we record under the discount column.
Uh,
17.
17, sir.
All right. And then the
And
amount we would receive will be the 680 minus that 17.
yes, sir. So it'll be 663.
All right. And it was a check. So we're going on cash or bank?
Bank, sir.
Right. Next one, paid $4,000 by check. This included $3,600 for new office equipment and the balance for repairs for an existing piece of office equipment. All right, so we're going to separate that into two payments, right?
Yes, sir.
But initially, in the end of the day is a payment. So which side are going on? Debit side or credit side?
Debit side.
Which side?
Debit side, sir.
Remember, there's the cash book, right? The cash book is an asset. When the assets increase your debit, when the assets decrease your credit. If you're spending money, that means your asset is decreasing because you're paying money, right? So you're going to credit your cash book. If it was your office equipment account, you would debit your office equipment. But this is not your office equipment account. This is the cash book. So we're looking at if your cash or bank money increasing or decreasing. If it's increasing, if you're getting money, it goes on the debit side. If it's decreasing, you're spending money, it goes on the credit side. So if you're spending money to buy equipment and to do repairs, then it's going on the credit side. You understand?
Yes.
So you come here, 27th of August. We'll do the equipment first. How much you paid for the equipment?
3600.
3,600, right? And it was by check. So under which column?
Banks.
Bank. And then how much money would have been paid for the repairs?
400.
200.
Right. 27th of August. Repairs. 400. You have to separate it because it's two different things, right? Then we have cash sales amounted to 4,224. Are we getting money or spending money?
Getting money soon.
Getting money, right? So it
So we
goes on
debit.
the debit side. 30th. Details will be sales. And which column will it go under? Cash or bank?
Cash sale.
Cash.
Cash sales.
4,224. Last one, deposited all cash in hand into the bank account except $500. So right now we have $4,324 in the cash column. We're transferring all of that except $500. So that will be, if you minus 500 from that, that is $3,834. Is our cash increasing or decreasing? The cash. Not the bank, the cash. Is our cash increasing or decreasing? If you transfer any cash to the bank account.
Is decreasing.
Increasing.
Decreasing. So what will we do to cash? Credit it, right?
Yes.
Credit.
So we'll come on the credit side, 31st of August. And to make sure you don't mix it up, right? To credit cash means to put it under the cash column on the credit side, right? So I'll put the amount under the cash column on the credit side, 3,834. So my cash is credited, correct? You'll see now my cash is credited, right? I have the money under the cash on the credit side. Then I'm going to put my details. And my details is supposed to be the opposite account being affected. In this case, it's bank. All right, so some people just get mixed up because they see the word bank in details, they just think it's bank being credited. But once it's under the cash column on the credit side, that means cash is being credited. Right? And I'm putting money into my bank account. So is my bank increasing or decreasing?
Increasing.
Increasing, right? So I'll go on the debit side, 31st of August, and I'm going to put the amount under the bank column on the debit side, 3,834. So my bank was debited. All right, just to make sure I don't mix it up. And then I'm going to put my details as cash, the opposite account being affected. And what kind of transaction do you call this? On a cash and bank
Contra entry, sir.
contra entry, correct. You're going to put a small c next to the details to show that it's a contra entry. That was the last transaction. There is no additional information that we need to put into here. So now we could do our balance carry on and balance brought down. Right? So first thing we'll do the balance carry down for cash. We have to identify which side is smaller. Which side is smaller? The debit side or credit side?
Credit side, sir.
Credit side. All right, so we go to the smaller side for the last day of the month. The details is your balance carry down. and the amount is the difference between both sides. So I'll add up the debit side minus the credit side from it. And when I do that, that will leave me with 500. Now I'm going to check to see which side is bigger between the debit side and the credit. Which side is smaller, sorry, between the debit side and credit side for bank. Which side is smaller?
The debit side, sir.
The debit side.
Debit.
All right, so go to the smaller side, to the 1st of August. Details, balance, carry down. And then I put the amount, which will be the difference between the both sides. So I'm going to add up the debit side. 8,150 plus 462 plus 64 plus 3,600 plus 400. And then I'm going to minus the credit side from it. Minus 663 minus the debit side from it, sorry. Minus 3,834. That gives me 8,179. After that, I'm going to put in all my totals, including my discount total. You don't do any balance carried on and brought down for discount, right? Because it's two different discounts. The
Yes, sir.
debit side is discount allowed. The credit side is discount received. It's two different accounts. So there's no balance carried on and brought down to. Put in my totals. This is 17. This is 0. This is 4,324. This is the same thing. 4,324. The bank column total is 12,676. Same thing for the credit side. And then I'll do my balance brought down. So as of the 1st of September, my balance brought down. Your balance carried on, if your balance carried on is on the debit side, your balance brought down will be on the credit side, and vice versa, right?
Yes, sir.
So this balance carried on the credit side for cash will now be on the debit side as the balance brought down. To the 1st of the following month, 1st of September, my balance brought down, it'll be 500 for cash on the debit side. And then for bank, 1st of September on the credit side, my balance brought down will be the same as the carry down, 8,179. And that is 10 marks. That's 10 marks for the exam to see. And then they asked us state one significance of the balance on the bank account at the end of the month. What is something you can tell me about this balance for the bank account? It's on the credit side. What does that mean?
It means we owe in the bank that amount.
Right, you owe any bank that amount. So it's a bank
There
overdraft,
there will
right?
be a bank overdraft.
Right.
Yes, sir.
$500.
Easy, sir.
Mhm.
Right. So that would be, if you got this correct, there's 2 marks. This is 3, and there's 10, so that's 13 marks so far. Then they said, team was learned through social media that there's a system that makes payments by electronic means. Recommend 2 electronic means that TMOs could use to pay for goods purchased from Bihari. How you can make payments electronically? You can think
Uh,
of ways.
Pardon, sir.
You can think of any way to make payments electronically.
Online transfers.
Online transfer. What else? You all know The debit card and credit card will be considered electronically.
Yes, sir.
Yes, sir.
Debit card, credit card. You ever heard about digital wallets? Or you
Yes.
ever heard of
Yes,
PayPal
sir. Yes, sir.
and Cash App and stuff like that? All of that
Yes.
considered could be considered electronic. There's even something called e-checks, digital versions of the paper checks. All of these are ways you can make payments electronically, right?
Yes, sir.
Then they said use information from the statement of account on page 5 of the cash book to prepare the account for Timor's in Bihari's account in Bihari's books. So Timor's is somebody who's owing money, right? According to the statement of account, he started off owing $520. So the 1st of August, balance brought down 520. Then he had an invoice at 340, which means we sold something to him on credit, right? And it increased how much he was owing. To the 9th of August, sales 340. Remember, he's a debtor account, which is an asset. When assets increase your debit, when assets decrease your credit. So if the amount he owes increases, it's going on the debit side. If the amount he owes decreases, it goes on the credit side. Then, according to this, a credit note is used when he returns goods, right? So he returned $24 worth of goods. If he returned the goods, does he still owe for it?
No, sir.
Yes, sir.
No, right? So when the amount they owe decrease, remember you're going to credit. So that's what we're going to do, right? The 13th of August, it would have been returned inwards. 24. Then he made a payment of $663 and received a $17 discount. Is that increasing how much he owes or decreasing how much he owes?
It decreased how much you owe, sir.
Decreases, right? So
Thank you, sir.
you're going on the credit side. What date was it? The 24th? 24th of August. Cash. Was it cash or check he paid? Check. So bank. 663. And then 24th of August. Discount allowed. Because he was allowed a discount of $17. And then we just check to see if there's anything else that we missed out for him. There's nothing here. And that was the last thing in the statement of account. So we're going to do our balance carried on and brought down. And the balance should be this 156, right?
Yes, sir.
So let's see. We add up the bigger side, the debit side, and minus the credit side from it. So 520 plus 340,
860, sir.
right, minus 24, minus 663, minus 17, and we get the same 156. So we put it to the 1st of August, balance carry down, 156. Now we put in our totals, which will be 860 on both sides. $860 860. And then 1st of September, the opposite side of your balance carry down. So my balance carry down was on the credit side. I'll come to the debit side now. 1st of September, details, balance brought down. It'll be the same amount as the carry down. 156. And that is 20. That is 5 marks to make up the 20.
Yes, sir.
It wasn't too bad, right?
No, sir.
Yes, sir.
Right. Pretty sure you could get the 4 marks on this one. Right. Right, so number 2. Number 2, they gave us a trial balance for a company with some additional information, and they asked us to do an income statement and balance sheet, right? No, not balance sheet. An income statement and a profit and loss appropriation account. Now, if we do an income statement, normally it's have sales as written in what equals net sales, etc. And then you have them calculate cost of goods sold. But if they give you a cost of goods sold already, then there is no need to calculate it again, right? And this question didn't have any sales, less written in what's to do. They just gave us revenue, which would be our sales figure. So to calculate gross profit, we just have to take revenue minus our cost of sales, and that will give us our gross profit. So that's exactly what we did here. We took our revenue minus cost of sales, and that gave us our gross profit. Now we have to do the rest of the income statement, right? And that's to add any additional revenue and minus any expenses. Now revenue would be on the credit side of the trial balance, and it would have the words received, revenue, earned, or maybe income in the name. So debenture is a liability, provision for depreciation, that's not revenue. These two things would be a capital, general reserve for the capital section, retained earnings, capital section, rental income. This would be our revenue. So we would add this 1,500 as revenue. Accounts payable liability, this is a bank overdraft. So the only revenue we have is the rental income of 1,500. So we'll put add revenue, rental income, 1,500, and we'll add it to our gross profit. So that'll be 108,700 plus 1,500, and that'll give us 110,200, and that part done. Now we're gonna minus expenses. Now before we minus expenses, we have a few calculations to do, right? Could they give us some additional information? They said auditors' fees was accrued, wages and salaries prepaid. We have depreciation to calculate. So let's do those 3 calculations first before we go into recording our expenses, right? Also, keep in mind, I'm not seeing anything for the debenture interest paid as an expense, but they said the debentures is 10% per annum. So there's a 10% interest that we're supposed to pay on our debenture. So even though it wasn't paid, that doesn't mean we don't record it, because according to the accruals concept, we record expenses in the period they were earned or incurred, expenses and revenue. It doesn't matter if they were paid or not. All right? Oh no, I'm seeing the debenture interest of 200. But although it's 200, it's supposed to be 10% of 4,000. Right? 40,000. So they keep that in mind. So we're going to do our working. Analysis of working. First thing we look at is the auditor's fees. They said auditor's fees was accrued, right? According to this, auditor's fees was 3,600. So that's how much we paid. But after we paid 3,600, we still owe 5,000. And we are recording in the income statement what was meant for the period. So if we paid 3,600 and we still owing 5,000, the amount we were supposed to pay would be the 3,600 plus the 5,000, which is 8,600. So that is how much we're going to be recording for auditors' fees. 8,600, the amount that we were supposed to pay. The amount that is meant for the period. So that'll be our first working. Second working now, we're going to do that for wages and salaries, because they said we had a prepayment. So according to the question, the wages and salaries that we paid was 20,100. But this is now saying that 2,000 out of that was a prepayment, meaning it's meant for the following period. We are only recording what is meant for this period. So our wages and salaries would be the amount paid minus the prepayment. So it would be the 20,100 minus that 2,000, which would give us 18,100. So that's how much we recorded in the income statement. 18,100. Then we have to calculate depreciation. Depreciation is 12% per annum using the straight line method. Whenever they give us depreciation to calculate using the straight line method, and it's a percentage, we just need to take a percentage of the cost of the asset. Work 3, depreciation, and it's going to be the cost of the asset multiplied by the depreciation rate. So the cost is the motor vehicle, right? The cost of the motor vehicle was 50,000. So we'll take 50,000 and multiply it by 12%. 50,000 by 12% is 6,000. And then the last one that's not here, but we know we have to look at, is our debenture interest. So you have to pay attention to those things, huh? Not just in company accounts. It could have been a normal loan interest as well. And they paid a certain amount or they didn't pay any at all, but then they said the loan interest was 10% or 5%. You have to pay attention to that and make note of it, right? So the debenture interest paid was 200, sorry. Total paid is equal to 200. But the total that's supposed to be paid is equal to 40,000 by 10%, which is 4,000. So they actually owe 3,800. So keep that in mind for if you have to do a balance sheet. Right. So the amount owing would be 3,800, just to keep in mind. So now that we did all of our calculations for the income statement, because the rest of this here will be information for the appropriation account, right? So now that we did all the rest of stuff we'd have to do for the income statement, let's record our expenses. So put less expenses. And I'm going to start off with the expenses that I did my calculations for to make sure I don't leave them out, right? So I had my auditor's fees. I had my wages and salaries. I had my depreciation. And I had my debenture interest. Tallied out. Auditor's fees was 8,600. Wages and salaries 18,100. Depreciation motor vehicle 6,000. Debenture interest will be the 4,000, the amount that was supposed to be paid, the full amount, right? Even though they only paid 200, he recorded the full 4,000. Then I'll check to see if there were any other expenses, and we have operational expenses, and we have director's remuneration. All right, so we have to record those other two expenses as well. Boom and boom. All right. So our operational expenses was 2,900, and our director's remuneration was 45,000. Make sure I put the right thing right. So I'm gonna add this up. Got my total expenses. And that would be 84,600. And I'm gonna subtract that from my 110,200. And this will give me my net profit, right? And that is 11 marks right there. Boom. Net profit would be 25,600. 11 marks secured. Now we could do the appropriation account for Amazon company. So they give us the heading here, but they say no heading for this time. So we'll do our heading now, right? It's small thing, we don't need the help. So we're gonna put Amazon company appropriation account. And it would be for the year ended to the 1st of December 2024. I like to use whatever wording they use. For the year ended to the 1st of December 2024. Boom. So when you're doing the appropriation account, right, the purpose of all appropriation accounts is to organize your net profits. You're going to transfer money from your net profit to the various places. So for example, for partnerships, you make adjustments in net profit, then you share it amongst your partners. For company accounts, you make adjustments in net profit, you transfer some to any reserves that you may have to transfer to, and you transfer some for dividend payments. And then the rest, they keep it as retained earnings. So we're going to start off with the net profit that we calculated in our income statement just now, which would be 25,600. And we're going to add retained earnings from any retained earnings from the previous year. If you watch here, we have retained earnings from 2023, which is the previous year, because according to this, we're doing it for 2024, and that is 13,500. which will give us a total of 39,100. Oh my, I could do a better line than that. 39,100. Boom. Right? From there, you have to look at two things. Any dividends that we have to pay, you organizing that, and any transfers to reserves. So we have a transfer of 7,000 to the general reserve. So we're going to subtract that. And we have our dividend, right? So in the appropriation account, we are recording all the dividends for the year that we paid. Even if we paid some already, like we did with the interim dividends here, in the appropriation account, we are going to record all of our payable dividends. The ones that we paid already, and the ones that we are going to pay. So our total ordinary share dividend is 3,000. Even though we paid 2,000 of it already, we're still going to record the full 3,000. And we're going to record the full preference shares. Because they said preference shareholders to be paid the outstanding dividend, meaning they're getting a full preference shares, right? Preference share dividends. And preference share dividends is 8% of their total value. So 8% of 10,000. So I'm going to minus proposed dividends, both interim and, well, the final, less final dividends. Ordinary shares. Ordinary share dividends, they said was 3,000. And then preference share dividends was how much were 8% of 10,000? And 8% of 10,000 is 800. We add that up, get total dividends of 3,800. 3,800, we're going to subtract that. So we're taking it from our net profit and our retained earnings to pay it, right? And that will leave us with 35,500. Sorry, 35,300. And then we're going to minus any transfers to reserves, which we know we have one for 7,000 to the general reserve, right? So a mistake people make here, they put their total reserves here. You're not putting the total reserves. This 15,000 is already in the general reserve. We're not touching that. All we put in is what we transfer in this year. So out of this money that we have here, we transferring 7,000 of that to our general reserve. So that's all we minusing. Transfer to general reserve. And that is 7,000. And then what we remain with will be our retained earnings. Retained earnings will be the 35,300 minus the 7,000, which will give us 28,300. Boom. Appropriation account completed. And that is 9 marks. That gives us a total of 20. And number 2 is over. So we go to number 3. And to my surprise, number 3 was in connection with number 2. Something I've never seen CXC done before, ever, for principles of accounts. Really weird to me. To just wanted to do part of a statement of financial position, and you're getting 20 marks for it. So the whole of number 3 is on this one page. Pretty weird for me, but that is what they asked to do, so let me do it, right? They didn't give us the heading again. That's small thing. We don't need them. We know how to do our own heading. We put the name of the company, Amazona Company Limited. Then the name of the statement, statement of financial position. And then we put the period. So as at December 31st, 2024. As at December 31st, 2024. So they want us to use number 2 to prepare the statement of financial position showing net assets. So all we're going up to is our net assets, right? So that is our fixed assets. We'll get our fixed assets, get a total, and then we'll calculate our working capital, get a total, and we're going to minus our long-term liabilities. And that'll give us our net assets, right? So let's get our non-current assets first. So you're going to put non-current assets. And we're going to calculate depreciation. So this first heading, we'll have the cost of the asset. The second part, we'll put in all our depreciation, our accumulated depreciation. And this third column will be the net book value, the value of the asset after depreciation. So let's do, did they say any order to use? They did not say to use order of permanency or order of liquidity. So let's decide for ourselves. Let's use order of permanency. So order of permanency is the one that is hardest to change to cash, goes first. So our non-current assets, according to number 2, since that's what we're doing, was motor vehicle. And we had anything else, boy? Yes, premises. So premises is more permanent than motor vehicle, and premises didn't have any appreciation. So that'll be easy. So we come here, premises, premises. The cost of it is 175,000. There's no depreciation, so the net book value is 175,000. And we go into the motor vehicle. And the cost of the motor vehicle was 50,000, if I remember correctly, from all the way back in number 2. Still find this weird, but what you can do? 50,000. And then your depreciation will be all your depreciation combined for your motor vehicle. So we had depreciation for motor vehicle of 6,000. And then in our provision for depreciation, we had 20,000 for motor vehicle. So our total depreciation will be the 6,000 we calculated before, plus the 20,000 that he had from prior years. So in total, the depreciation will be 26,000. So your net book value would be 50,000 minus 26,000, which is 24,000. You're going to add that together, and that will give us our total fixed assets. Which will be 199,000. Now it's time to do our current assets. Now we have to keep in mind that all the way back in number 2, we had wages prepaid. Any expenses prepaid is considered an asset. So prepaid, expenses, and accrued revenue are current assets. All right? Prepaid revenue, sorry, and accrued expenses are current liabilities. So there's things to keep in mind. So wages paid in advance would be a prepaid expense, which is a current asset. If you can't remember, just think about who owes who. If they owe us, is a current asset. So prepaid expense, I pay an expense in advance, you now owe me what I paid for. That is a current asset. Prepaid revenue, you owe me revenue. No, accrued revenue, sorry. You owe me revenue, that's a current asset. Prepaid revenue, you paid me revenue, so now I owe you what you paid for. That's a current liability. Accrued expense, I am owing on an expense, that's a current liability. Think about who owes who. All right, so we have prepaid expense, and we have any other one, boy? Let's see. Account receivable, 18,600. Not cash at bank, because it's on the credit side, so there's a bank overdraft. So we're gonna be going according to permanency. So we put in our accounts receivable first. Accounts receivable. And the account receivable, there was no provision for doubtful debts in this question. So we have nothing to subtract from it. So we're just going to record the 18,600. And then we have our prepaid expense, prepaid wages and salaries, which was 2,000. So our total current assets would be 20,600. Total current assets, 20,600. Boom. Now we have to calculate working capital. And in order to calculate working capital, we need to have current liabilities. So let's list out our current liabilities now. The current liabilities, and this have no order, right? You don't have to put it in any permanency or liquidity or anything like that. We're just listing out our current liabilities. So our current liabilities, and we have to pay attention to this part. We have the bank overdraft, so that is owing. We have accounts payable, as a current liability as well, our basic current liabilities, We also have the auditor's fees that were accrued because we're still owing at 5,000. We also have the dividends payable. We always forget that. So total dividends for ordinary shares was 3,000 and we paid 2,000. So we still owing 1,000. Total preference shares paid would be 800. Owing 800, we paid 500, so we still owing 300. So that have to be recorded as a current liability. And then we have the debenture interest owing still, because remember we only paid 200 and we calculated debenture interest to be 4,000. So that debenture interest that's still owing, that 3,800. We had to record that as well. Move it across so you can see it a little better. We had to record that as well. So we have a few current liabilities to record. So let's put them all in. Let's see if we remember all five. We have bank overdraft. We have the accounts payable. We have the accrued wages, accrued auditors fees. We have our debenture interest owed. There's a lot of people, let's forget. And we have our dividends payable still, the ordinary and preference shares. Dividends payable, ordinary, and preference. So the ordinary shares, no, let's not start the ordinary shares. Let's start with bank overdraft. Bank overdraft was all the way in question 2, 3,100. Accounts payable was 20,800. 20,800. Then we have the accrued auditor's fee, which I believe was 5,000 owing. 5,000. The bench interest owed. 200 was paid, and we were supposed to pay 4,000. So we still owing 3,800. I draw a little bit to pay, but why even bother to pay 200? Anyway, then the ordinary shares owing still, it was 3,000 in total. You only paid 2,000, so we owing 1,000 for ordinary share dividends. And then the preference share dividends is 800 in all, and we only paid 500. Right? So we are still owing 300. Right? So we're going to add up all of that to get our total current liabilities. So 3,100 plus 20,800 plus 5,000 plus 3,800 plus 1,000 plus 300. And that will add up to 34,000 exact. That will be our total current liabilities. And then I'm going to calculate working capital by taking current assets and subtracting current liabilities from it. So 20,600 minus 34,000, and that will give me a working capital of negative 13,400. I'm going to subtract that from my fixed assets, and that is going to give me 185,600. 185,600. Now, before I finish, one thing I forgot to put is extract. And that's because this is part of a balance sheet, not the entire thing, right? So whenever you're doing part of one income statement or balance sheet, you put extract. Right? I forgot to put in that part. Now, the last thing we need to do to get our total net assets is to minus long-term liabilities now. Because remember, net assets is total assets minus total liabilities. So let's see. Do we have any long-term liabilities here? And I already remember our debentures of 40,000, which is a long-term liability. So we're going to subtract that. So less long-term liabilities. And that'll be our debentures. And the debentures is 40,000. And that is going to give us our net assets of 145,600. Now, if in the exam, you did your capital section just to see if it would balance or not, it would not have balanced. And the reason why it would not have balanced is because the trial balance that it gave you also did not balance. So what you'd have had to do was check to see if it was not balancing by the same amount that the trial balance wasn't balancing with. And I went ahead and did that before doing this video, and it was. It was not balancing by the same amount that the trial balance wasn't balancing. So that means, barring any mistakes that would not make the balance sheet not balanced, we seem to be correct. So that is number 3 finish, and we can move on to number 4. Number 4 made a lot of people smile and a lot of people stay in anguish because it would have looked very unfamiliar. It's not something difficult to calculate. It's just if you're not sure of the terminology, it may have thrown you off a bit. They said Simon is an entrepreneur who deposited the sum of 65,000 in a 5-year investment plan with Financial Investment Company Limited. At the maturity date, Simon is to receive the original amount invested together with the annual interest for each of the 5 years. Interest is calculated each year at the original amount deposited at a rate shown in the table below. Calculate the average annual percentage rate which is payable over the 5-year period. So to calculate the average, just like anything, you add up the total amount, the total of each of the variables, and divide it by the number of variables. So I'm going to add, so let's see, average percentage, average annual percentage will be my total percentage rates values. Divided by the number of percentages, right? In this case, it's 5 different percentages, 1, 2, 3, 4, 5. So divided by 5. So it will be 2.5 plus 2.75 plus 3 plus 3.25 plus 3.5 divided by 5, and this would give you 3. And that was 3 marks. Hey, the answer is 3% and you get 3 marks. Coincidence? Then they said, calculate the dollar amount of the total interest earned by Simon on the investment, right? So remember they said, each year you're getting this percentage of the original amount, right? The principal. So to calculate the total money, I have to take 2.5 multiplied by 65,000, added to 2.75% by 65,000, added by 3% to 65,000. You get the picture. So let's see. Year 1 would have been 65,000 by 2.5%, which is equal to 1,625. Year 2 would have been 65,000 again, multiplied by 2.75 this time, which was equal to $1,787.50. Year 3 would be 65,000 again, by 3% this time, because that is how much percent was for year 3. 3%, which is equal to 1,950. Year 4, which is, you guessed it, 65,000 again, multiplied by year 4 was 3.25%. I could look right here and get the different percentages. Boom, year 1, year 2, year 3, year 4, year 5. And that gives me $2,112.50. And then year 5 would be 65,000 again, multiplied by 3.5% this time. And that would give me 2,275. And then I'll just add up these 5 values. So this is practically a maths question. But you add up these 5 values and you'll get 9,750. So that's the total interest earned. 9,750. 4 marks. Then here they say calculate the total amount payable to Simon upon maturity of the investment. So according to this, it says that at the maturity date, Simon is to receive the original amount invested together with the annual interest of each 5 years. So the total amount payable is the original amount invested, which we call the principal, add total interest, which is what we just calculated to be 9,750, right? So it'll be 65,000 plus 9,750, which would give us 74,750. And this was for 3 marks. All right. Thanks, I guess. And then they asked us to calculate the return on investment for the 5 years. So the return on investment would be, I'm gonna write it out, return on investment, ROI in brackets. Boom. And that is equal to the interest divided by a capital invested, right? Interest earned divided by the amount that was invested. A capital or a principal invested, whatever you want to call it. So in this case, well, and then multiply by 100 to change it into a percentage. So in this case, the interest earned was 9,750. Capital invested was 65,000. multiply by 100, and I'll give you 15%. And then they said to explain to Simon the meaning of his return on investment, right? So we could say that the return on investment of 15% represents the total percentage return that was earned on the original capital invested um over of 65,000 over a 5-year period. This means that Simon earned 15% on his principal over 5 years. Now keep in mind there would have been inflation during this period, and this calculation doesn't account for inflation. So you could even mention that if you like. This, however, does not account for any inflation. Alright, so it does not account for the value of the money. Boom, 2 marks. And then they said, due to the current economic conditions, the industry's average return is 2% per annum, with all factors remaining equal. State whether Simon made a good decision when he invested the 65,000 with Financial Investment Company Limited. Well, since his average return was 3%, and the industry average is 2%, that means he made a good decision. So based on the information, Simon made a good decision. So let's make some comparisons. For one, average interest rate 3% is higher than the 2%, right? So the average, remember we calculated that before? The average annual interest rate Simon earned was 3%, which is larger than the industry average's 2%. So that alone should be enough to get it 2 marks, because I said he made a good decision, and I gave one reason why. But I could even go as far as to state under the industry average, total interest earned would equal to 65,000 by 2% by 5, which would be 65,000 by 2% is 1,300 by 5, 6,500. However, Simon earned 9,750. However, Simon earned 9,750, which is 3,250 more, which is $3,250 more than he would have earned under the industry average. So I just try to tell extras and make sure I get my marks now. He would have earned at 2%. Just to make sure I get my marks. Then they said, complete the extract of the projected cash flow statement showing below which with the amount investment with the investments maturity payout amount to Simon total anticipated cash flow. So he would have received from his payout the 65,000 plus the interest, right? So his investment payout was 74,000. How much it was? 74,750. So let's put total cash inflows and add up those three numbers. So there's 2 marks, and I want to get all my marks. This will add up to 210,750. And that is 20 marks in total. Number 4 completed. So not too bad. Going on to the last question now. They said, Jam Block Club is a sports club located in central location. List 3 sources of funds that may be available to the Jam Block Club apart from member subscriptions, right? So they could do fundraisers. All right, so non-profit organizations do a lot of fundraisers. They might even get donations. They could get grants. They could get loans. They could get sponsorship. A few different examples, right? Then it said Jan Block Club made the expenditures list in the table below. Complete the table below by inserting a check mark in the appropriate column to indicate whether each expenditure is a capital or revenue type of expenditure. So whenever you purchase a fixed asset or make improvements on that fixed asset, permanent improvements, it will be capital expenditure. Your regular expenses that are recorded in the income statement would be a revenue expenditure. So you purchase office supplies, that's stationery. Stationery is considered a revenue expenditure. Bought new custom accounting software to upgrade the financial reporting operations of the club. That's definitely capital expenditure. You're making an upgrade to the system. Paid MRC Limited to install the customized software into the clubhouse. Installing it is going to make a permanent improvement again. So that's a capital expenditure. Paid salaries to office staff, that would be revenue, normal expenses. Paid maintenance worker, maintenance is not improvements, that would be revenue. 5 marks. Then it said Jan Block Club had the following receipts and payments during the year ended April 30th, 2025. Alright, so they want us to do, based on this, what I'm seeing here, they want us to use the information to prepare receipts and payments account for Jam Block Club. Alright, they didn't give us any heading. So this is pretty easy. I'll put in the heading first here. Jam Block Club receipts and payments account. For the year April 31st, for the year, and then 30th of April 2025. And it's pretty simple. Whenever you're getting money, it goes on the debit side. When you're spending money, it goes on the credit side. So you start off with your bank overdraft. And a bank overdraft will be on a credit balance, as we know. So you put that on the credit side. And if you're getting money now, you record it under receipts. If you're spending money, you record it under payments. So receipts on this side and payments on the credit side. So refreshment bar sale. You sell something, you're getting money debit. Subscriptions received. People paying to be part of the club, debit. Competition fees received, debit. Refreshment bar purchases, money you spend, credit. Payments for competition prizes, payments, credit. Donations received, money you get, debit. Rent and insurance, money is spent, credit. Wages of shop assistant, money is spent, credit. So I put those stuff in already. So we don't have to waste our time doing that part because we know how to do it already. We get money a debit, spend money a credit. Right. This will be 2024. And then 2025. This everything here would be 2025. Now you put the whole date in it, says you April 2025 and so forth. Just I'm trying to save time. And then from here now, I'm just going to balance the account. So I'm going to check and see which side is bigger, which side is smaller. From looking at it, I can see that the credit side is going to be slightly bigger. So I'm going to the debit side, which is the smaller side. I'll put the last day of the month, which is the 30th of April 2025. Details to be balanced, carried down. I'm going to add up the debits, the credit side, the bigger side, and I'm going to minus the smaller side from it. So it'll be 2,600 plus 142,000 plus 160,000 plus 40,000 plus 39,000. And then I'm going to subtract 210,000, 60,200, 80,000, and 20,000. And that will leave me with 13,400. Then I'll put in my totals. Which would be 383,600. 383,600 and add up everything. That's how much I got. And then the first of the following month, so after April is May, the 1st of May, on the opposite side of the balance carried on. So the balance carried on is on the credit side. I'll go on the balance carried on is on the debit side. I'll go on the credit side. 1st of May, details will be balance brought down, and it will be the same amount as the balance carried on. 13,400. Right, that is 8 marks. Now the last part now, they give us a bank reconciliation question. So they said the accounts clerk at Jam Block Club analyzed the financial records to prepare a bank reconciliation statement. At the end of the month, the club's receipts and payments account at the bank and the bank statement record showed two different amounts recorded as overdrafts. In preparation for drawing up a bank reconciliation statement, complete the columns in the table below. Select the current columns to indicate whether it is in the receipts and payments overdraft amount or the bank statement overdraft amount that is being adjusted. So we have to adjust either receipts and payments or the bank overdraft, not one of them, right? In each case, use add or minus above to show the action needed to bring about the reconciliation. Write the amount that is needed to bring the bank statement overdraft into agreement with the overdraft in the Jam Blocks column, Jam Block Club's receipts and payments accounts. So let's look at the example to see if we can make sense of it, right? So checks deposited for $10,000 has not been cleared by the bank, right? So this is a late lodgement, right? Normally, in the bank reconciliation statement, you minus late lodgements, you add unpresented checks, and you minus late lodgements to get a revised cash book balance. In this case, they have minus 10,000. So we minus late lodgements to get our bank statement, bank statement balance in revised cash book. That is what they do here. Minus late lodgements. Right. Next one now. Check paid for purchase of accounting software 2,759 had not been presented to the bank. Normally, in your bank reconciliation statement, you add unpresented checks and you minus late lodgements. This is an unpresented check. So we're going to add the unpresented check, 2,759. All right, that's what we're doing. Then here now, check for 4,000 received last month from G. Kello, a customer, was reported as dishonored by the bank. Right? So normally, in the bank, in the revised cash book, if you since we're going with this format, right? In the revised cash book, if it's money that we received, we would debit or add it. If it's money that we pay in, we'd minus, right? So when we receive this money, we'd have added it to our cash book balance. But now that we realize it was dishonored, we have to take it out. So we're going to minus 4,000. This next one now, check paid to supplier Joggy Boy Limited had been entered in the club books as 2,567. So we were supposed to pay 2,765, but we paid 2,567 instead. So we owe in 198. We didn't pay 198. So we had to pay that 198, right? So we're going to minus 198. And then the last one, some club members had deposited their yearly subscription fees directly into the club's bank account. 11,339, that's money we receive. So we add in that, right? So we're going to add 11,339. So a super question in my opinion. But what are you going to do? And that is it. The end of the exam. You all let me know if you all think this was difficult, if this was easy, if you all liked that number 2 and number 3 were combined or not. What you thought about number 4? What you thought about how number 5 was worded, the last part? What you thought about the statement of account? You all let me know now. But this was May 2025 POA Paper 2. I hope this video proves to be helpful.